Okay, so as we studied, so I will be quickly sort of summing up the purchases journal, what it includes, what is happening with that, and what are the key components in it. Okay, now purchases journal is it's a prime entry book. Okay, and it's the place where you record your items you bought on credit for the reselling purpose. For example, let's say you are buying something for the purpose of reselling. Number one, for the purpose of reselling, and you are buying it on credit basis. Now when you are buying goods, you have two bases. One thing is you can buy on cash, the next thing is you can buy on credit. So if you buy on credit for the purpose of reselling, you are recording it in it firstly in your purchases journal. Okay, and then, for example, let's say you are buying stationaries. If a business buys and resells stationaries, the purchase of stationaries on the credit basis is recorded in purchases journal. And let's say if a business buying and resell automobiles, the purchase of automobiles on credit basis is recorded in the purchase journal. That is what we do on purchase journal. Okay, so in purchases journal, one thing we have the purchases, and the next important thing we have is the creditors. People who supply us goods, those will be creditors, and these creditors are a liability to business. Okay, and then the next thing is the invoice. Now, when we are purchasing on goods, when we are purchasing goods for resale on credit, and when we are recording it in purchases journal, firstly we receive the source document. And source document for this is the purchases invoice. Purchases invoice is the source document for purchases journal. And what we do is we take the invoice and we extract the data from it and we record it in purchases journal, and subsequently we are posting them into respective ledgers. So we look at an example of purchases journal. For example, this is issued from Deshan Bookshop. Now let's say you are Rashmi Bookshop who is buying from Deshan Bookshop, and this is your purchase journal. Okay, Deshan Bookshop is the issue of this purchases invoice, and you are the buyer. So this is your purchases journal, and this is the manager of Rashmi Bookshop. So if you look at it, you can see the invoice number, which we already talked, a unique number, and you have all the details of the goods you purchase. For example, here you have purchased 40 drawing books at 100 rupees per book, and 200 CR books 130 rupees each, 120 exercise books 60 rupees each. And then what has happened is you have to pay 37,200. Now in our earlier lesson also we learned about trade discounts and cash discounts. So you have received a 10% trade discount, okay, 3,720. And this trade discount you have to deduct it, and this is the net amount where you will be recording your purchases value. The අපි ගත්තොත් එහෙම trade discount එක කියන එක, we are not recording it in our account. So we already learned about this. Okay, and the next important thing is you have a condition here, condition 5/30 net 60. What does it mean? Making kyanne, like now let's say Deshan Bookshop is telling to Rashmi Bookshop, hi Rashmi Bookshop, you have 60 days to settle me this 33,480. Okay, you have 60 days to settle me this 33,480. And if you settle this in, you have 60 days to settle this 33,480, and if you settle this in 30 days, this 33,480, if you settle it in 30 days, okay, this 30 days I will give you a 5% cash discount. Okay, that is what is being told here. And that cash discount we are accounting separately as we are collecting money and collecting the payments. So those are the key things we recorded, we studied. Okay, and this is sort of like format of the purchases journal. And then we wrote the note. Okay, these two slides. And now we are going to